and you know I got your back. You put your trust in him, you can depend, and I know, cause he showed it. Be with you till the end.
Thank you for watching Ask Crystal Morris. Part 1, we discussed income qualification. And in today's discussion, we're going to go into further detail about the income qualification process. When you income qualify for a mortgage loan, lenders are looking at your most recent 2 years income as well as your year-to-date income. So we are looking at your W-2s and your tax returns for the most recent 2 years. We're looking at your most recent 30 days paycheck stubs as well as your most recent 2 months bank statements. Once you give us this information, we will calculate your monthly income, and here's how we do it. If you're paid monthly, that's once a month, then we're just going to use that monthly payment amount. Some people have jobs who only pay them once a month. In that case, you want to provide at least 2 paycheck stubs with that to support that income. If you are on a fixed income, then such as like Social Security or a pension, then you want to provide your pension award letter or your Social Security award letter, the most recent one that they gave you for the year. You also want to provide your 3 most recent bank statements showing those funds being deposited into your account. You also want to provide the tax form 1099 that the income provider gave you for tax purposes at the end of the year. If you're paid semi-monthly, that means on a designated day of the month, twice a month. So that would be like the 1st and the 15th or the 15th and the 30th. In order to calculate that income, you would use the amount that you earned that pay period or per pay period, and you would multiply that amount times 24. The total that you get from that multiplication should be divided by 12 to determine what your monthly income is. Let's look at an example. So if you get paid twice a month, and you would know that if you, or bi-weekly, then you would know that because in instances where there's a long month, you may get paid 3 times in a month versus twice. So in that instance, you would take the amount that you earn per pay period and multiply it times 26. You would then divide that total by 12. The number that you get is what your monthly income is. Let's look at an example. If you are paid weekly, then you would take the amount that you earn per week and multiply that times 52 because it's 52 weeks in a year. You would take that total and divide it by 12. That's your monthly income. One thing about people who are paid hourly, and maybe even some other people as well, is that they have the opportunity to work a lot of overtime, and that's a good thing. However, you have to have a history of receiving overtime income for 2 years in order to use it for qualifying purposes. The other thing that I want to let you know about is that when you are income qualifying for a loan, banks use your gross, not your net. Your gross is before taxes are taken out of your check. Another point is that supplemental income can be used to help you qualify for a mortgage loan. What I mean by supplemental income is income such as child support, alimony, or even Section 8. And yes, you can use a Section 8 voucher to help you qualify to purchase a mortgage loan. If you get child support and you want to use that income to help you qualify for a loan, my suggestion is that you do it prior to the income ending. And what I mean by that is that supplemental income has to have the likelihood of continuance for the next 3 years. So if you know that your child's child support is going to end within the next 3 years, then you want to go ahead and qualify for your mortgage loan prior to that time. Well, that wraps up the income qualification series. I hope you enjoyed it. I hope you learned something. Please feel free to comment below and ask any questions, and like my page. It's Crystal Avery Morris, and I look forward to doing the next series. The next series is going to be all about assets. See you soon.
Believe you, and you know I got your back. You put your trust in him, you can depend, and I know it. 'Cause